Do me a favor, look to your right, look to your left, and realize we're surrounded by losers. Welcome back, everyone, to the $100,000 to $1 million public account series. We had a little bit of an interesting day today, okay? A 3% pullback, that's roughly $4,400 down, and it gave us the opportunity. If you see, this buy power went down pretty dramatically. We bought up some more Meta. We entered a nice position in Netflix. We purchased a little bit more Google, and there's a couple new tickers that I have that are under a microscope that I'm very optimistic about, and I think will be a very interesting play. So one thing you have to remember, if you're looking for amplified gains, you're also at risk of an amplified downside. And one tool that you can use to assess the amplitude of your downside is a beta value. So if we look at Meta right here, Meta essentially has a 1.24 beta, and I would say it's honestly a little more than that. I'm not sure how they calculate this, but I would say if you considered overall market volatility as one whole unit, it's about 124% the volatility of the overall market. So if we look at a stock like SoFi, SoFi has a 2.2 beta value. That would suggest that it's over double the volatility of the market. And we're going to be getting into in this video a little bit of the support and resistance levels of SoFi, so stick around. I did want to say though, however, obviously the channel's still growing, but I did notice, all the people that are watching the video watch almost the entirety of the video. So that's awesome that we're having that sort of retention, and I'm glad you guys are enjoying what's being said. Remember, this is real money. This is not fake whatsoever. This is real risk that I'm taking to do this completely publicly, and I'm super happy to bring you guys along with me. So what we're going to get into today, 10 years of lessons in 10 minutes. And I've been saying this for a long time. The stock market is a very simple exchange that kind of masquerades behind complex terminology. So, hot takes, all right? This is like your uncle at Thanksgiving. And the cool part is I'm getting to the age now where I'm that uncle, all right? I'm the uncle with the hot takes that says irrational things at the table. But just know that if there is a book, a seminar, a reading, anything from Peter Lynch, Charlie Munger, Warren Buffett, Bill Ackman, Ray Dalio, Jim Simmons, I've read it, I've watched it, I've listened to it. So take it from me that I'm not just blowing smoke at you. These are things that I've learned from people that are much better at this than me as I continue to learn and go on this journey. So number one, create a Robinhood account. Honestly, I've been through all the trading platforms, and now that we have this challenge, I have a majority of my funds over on Webull. Webull is also a good platform, but honestly, for learning, there is no more user-friendly platform than Robinhood. I'll go and I'll show you exactly how you'd buy a stock. You go in, you find the ticker that you want to buy, you come over to the right-hand side, and you purchase yourself a share of that stock. And the mobile app is honestly just as simple. Number two, too much diversity will murder your gains. Warren Buffett says that diversity is a hedge against stupidity. And this is what I stress the most on this channel, is buy with conviction, buy heavy, and be patient. So many times I see these little Reddit pages where somebody's got SCHD, VOO, all these index funds, and you're diversified throughout index funds. Oftentimes, those index funds are about the same. So whether you buy Charles Schwab index or the S&P or this and that, you're buying a compilation of the same stocks anyway. So potency is how you amplify gains. And if you sit around and worry about little swings, you're never going to have great profits. And I maintain this position, that if indexes are your entrance into the stock market, then more power to you. Everybody should be investing. Everybody should be learning. And if index funds are your way of stepping into the market in a very safe way, then albeit do it and get exposure. The core principle to this is if you want to be rich, you have to get really good at something. It might be sales, it might be being a physical therapist, it might be the stock market, but you will not overperform in the long term following the herd. Next, buy when it's uncomfortable. If you could think, what does everybody say? When's the best buying opportunity? In a recession, in a correction. You could say 2008, but honestly, the best answer was COVID. Okay, COVID murdered the markets. Everyone thought that society was going to a hell in a handbasket and that the stock market was completely obliterated, which for a short period of time was true. But remember, that's where the historic buys come in. I remember buying as many Amazon shares as I could possibly afford at $88, knowing that the day was coming, and then I went and ended up paying for my college. This kind of goes with the sentiment, mo money, mo problems, okay? You're going to have bigger swings. There might be a day where we go and we lose $10, $15, $20,000. That'd be crazy, but it could definitely happen. And people aren't going to relate to you. They're not going to understand the problems, but you have to be disciplined. And then we will see the day where we celebrate. Number four, we can't all be rich. Next time you go to the grocery store or you're out in public or there's a bunch of people around, do me a favor, look to your right, look to your left, And realize we're surrounded by losers. This is what I'm talking about with index funds. Let's say tomorrow we wake up, the S&P's at 25,000 bucks. What would happen? The Fed would jack rates through the roof. Inflation will be through the roof. We can't all be rich. You have to go the extra mile. You have to have an edge to get ahead. Does this mean you have to be an ultra genius and know the next tick of every stock? No, and I couldn't tell you the next $10, $20, $30 for Meta. I couldn't tell you if it's up, down, or sideways, but what I can tell you is that it's at a discount right now. I can't tell you if we're going to realize that a month, 6 months, a year, 5 years from now, but that's how we get ahead. Meta could pull back to 350 bucks a share, absolutely, and I could see that happening. It could get worse before it gets better, but we remain disciplined, and we buy cheap stock, and we carry on. Be composed and calculated. Okay, look at this guy. Listen, I've seen this show like once or twice. If this guy disagreed with me right here, I would pretend it was a misunderstanding and I would agree with him. Ordinary people are not going to understand your day-to-day issues with the stock market moving one way or another. Look, someone could look at the portfolio today and say, oh, he's down 4,500 bucks. We made 50 in the last 3 months. We're doing okay, all right? Your day-to-day problems become much different. You have to be able to be composed, and we're able to celebrate in those times of great victory and all this sort of stuff, but we have to remember that when the market is down, this is honestly the most fruitful it becomes. So now, let's go back into SoFi. So what am I seeing out of SoFi? So let's see this support and resistance level. So we see a support level around $14.60. We see a resistance level right below $20, so roughly $20. Why do we not pull out right now, okay? It's at 1832. It's coming close to that resistance level. And the answer is that we did sell down SoFi. We have been selling down SoFi when we made this run. Look at our cost basis of 1621, and this was after earnings when it got beat up. It's up at 1832. Remember, we had 4,000 shares at one point. We're down to 1,600 bucks. So if you look at this support and resistance level, it's roughly $4. $4 times 4,000 shares. Do the math. That's good money just in the support and resistance valley. So this is what I'm talking about, an exit plan. This is sort of 300 level trading where you're talking about skimming and scalping. But let me show you where the real money is made. And if we go back to Microsoft, let's look at over here. So remember Microsoft in this valley. We held Microsoft through here, support and resistance. Look at our cost basis at 380. It's gone up a little bit because we did purchase some. But at one point, we had over $100,000 just in Microsoft stock alone. And if you look in this valley, the support and resistance and the volatility it had, we were able to scalp about an extra $10,000 to $15,000 just in this valley. But what does it do when it breaks the resistance? It bounces up $100 a share. It could go up another $100 a share. So with our exit plan, we're down to $15,000 held in Microsoft for the possibility that it does continue on. But in all likelihood, it forms a new valley where it will establish over the coming months a support and resistance level. And we're able to use our buy power to scalp out some gains. Now, does this mean that this is what you have to do to make money in the stock market? Absolutely not. And I would honestly say that we'd be very hesitant on Microsoft because it's approaching our fair value established for Microsoft of around $500 a share. But if we talk about Meta, let's look at Meta. Let's look at our cost basis really quick. So if we zoom out here, Meta was up easily into the $800 range right around Q4 earnings. So our cost basis on Meta is right around $588. I would say a fair value for Meta right now is right around $815 a share. So this gives me the comfortability knowing that Meta will most likely pinball around for a little bit. So it gives me the confidence and peace of mind to be able to buy large quantities of Meta and possibly take early gains and shave down before we see our explosive run up to that $800 to $850 range. And same is to be said with SoFi. I'm very bullish on SoFi. So our new stocks that we have under a microscope. And I'm going to use this honestly as a little bit of a hedge. We have MUU. This is a double leveraged Micron. That means in essence we have to be very careful with this one. However, remember when I was talking about that capital rotation, it is possible that with CapEx coming out that it puts the ball back into the court of the semiconductors and the memory stocks. So we may take a small position. I'm talking $5,000 to $10,000 in MUU because the one thing I'm very confident in is it's either big tech or semis. I'll be studying this more over the coming weeks. Thank you very much for watching this episode. I will get back to you with more information later this week. Don't forget to like and subscribe. Thank you guys so much. Remember, every $10,000 milestone, we're doing $250 cash to a random homeless person once we get to 5,000 subscribers. So hit that subscribe button, hit the like button, leave a comment, and thank you very much.